Now, more on currencies. The euro has retreated after failing to break $1.50. That prompted traders to close out bets the currency would rise further. Right now we have the euro at 139.1, rebounding a little, about a tenth of 1%, still way below that 140. Westpac Bank says the euro is likely to fall further next week on increased risk aversion and concern about European banks. Well, for more on the euro, let's go to Bloomberg's currency reporter Patricia Lui. She is in Singapore. Trish, what is the sentiment like on the euro now of the people you speak to?
Well, not good at all, Paul. Basically, the traders I'm speaking to say that the euro is one of the weakest major currencies that they'll be looking at, and they're looking for more weakness ahead. Like you said just now, it's all about the banking sector, especially after the recent G8 meeting where, the finance ministers there continue to reject calls for stress tests, much like what the US and the UK did. So everyone's a bit concerned about the extent of the rot that remains in the European banking sector. And also, market doesn't like the fact that among all the economic data that's coming out of the major economies, the Eurozone continues to print out one of the weakest ones across the board. So they expect that the euro could actually continue to come under pressure. The days of the euro rebound, according to most traders, are over. They are looking to sell the euro-yen, euro-Swissy as well. Don't forget that the Swiss National Bank has there are talks that it may stop intervening to slow the pace of the currency's appreciation, so the currency could appreciate once again, and this could actually pressure the euro as well. Paul?
And what about the dollar then? We've seen a lot of volatility around that 80 on the dollar index. What are people saying about the USD?
Well, the USD, basically this week it was very much a risk aversion theme, a reality check theme. We had lots of leaders around the world warning that recovery may be underway, but hasn't really taken off in a grand way yet. So there was a lot of reality check, and because of the stock markets around the world basically corrected, including the MSCI World Index, MECI Asia Pacific Index, they all corrected by the biggest weekly decline since March. So we're seeing a bit of reality check, but and therefore the dollar was actually slightly stronger. Also, we had the market starting to price in for some reason chances of a Fed hike, and of course they start to roll back next week. But next week will be interesting because it's FOMC meeting, Paul, and traders will be saying they'll be watching very closely to what the Fed will be signaling as far as rates expectations are concerned. We also have the biggest record size euro treasuries auction next week, which could actually, pressure the US dollar as well. Paul.
Okay, more on treasuries in just a couple of minutes. Trish, thank you very much indeed for that. That is Patricia Lui there in Singapore.